So good morning everyone, it's Monday and time for the Monday market analysis as every week around this time. Quickly starting at the news sites, market is looks like it's a bit on the recovery side, having a bit of a relief rally. We'll see that in the charts in a bit. For the rest, nothing really big crypto related. China releasing its public blockchain company. Interesting to see how that develops. But for the rest, nothing new on the horizon. Some potential fear inducers in the market, so that might have the long-term downside. On the calendar for today, we have a quiet day today and also tomorrow. Don't expect any market movers. On Wednesday we got the Fed meeting minutes. That could mean some changes in direction potentially. Don't expect it at this time, but always good to keep an eye out. At 8 o'clock European time. Thursday, GDP growth rate. That's going to be interesting because the consensus is now that the US economy is shrinking by 1.4%, but I do have like a bit of a feeling that it could be worse than that. So Thursday market open, be careful and have your stop loss in place if you're trading at that time, because this could definitely be some turmoil in the market. Friday, personal spending on the consumer side, especially interesting since a lot of consumer companies has made a big drop last week, like the retail sellers like Walmart and stuff. Also one thing to keep an eye on. So I think the main things this week are Wednesday the Fed, GDP on Thursday at market open, and the personal spending Friday at market open. So let's enjoy a relatively quiet Monday and Tuesday on that account. Let's switch to the charts. It will work for me today. Somehow TradingView quit with an error. Just trying to restart that one. Oh, lovely. TradingView, please start. This every time you stream, there's something technically going wrong there. But it is starting. See if I can capture it. It's trying to load. Please have some patience with that. When streaming, it kind of eats all the resources. So let's hope it will load. Almost there. See if I can grab the window. Not yet. Always on the Mondays. Otherwise I'll try it in the browser, but that is kind of slow usually. Oh well. Thank you for crashing TradingView. Okay, last try and then I'll try to I'm getting close, Almost there. Don't quit yet. This takes time to start everything up again there. There we go. Finally, we have charts. All right. Let's kick out some alerts. Let's continue this stream. DXY, it hit 105. There, the 0.618 extension, common retrace target, and it's now looking like it's breaking through the, no, not yet, almost at the 102 support level. Last week we did expect in the Monday market analysis a bit of a pullback there to around this 102-ish level, and it seems some people are jumping from the dollar into some other assets, so that should be visible in the other charts to come. If we look at bottom, it might even go backtest the 100 if this relief rally on other markets continues and picks up any speed and momentum. So could definitely go to around this 100 support level. Quickly put a line there in the sand for us to monitor that. So this is good for everything that's measured in US dollars, stocks, Bitcoin, gold, etc. So today already 0.73%, so quite a good move on the DXY in traders' favor. Quickly looking at Nasdaq Bitcoin correlation, we're still very high, around 93% there. So even over the weekend we didn't move that far away from the Nasdaq. Gold, as we seen last week, where one of the headlines was gold is around entry levels, and that was on the 16th. So we made a nice 2% move for gold, and for gold that's quite a significant step up, obviously. Don't see why it wouldn't go further up. You see we have a lovely 3 harmonics around this level. We're at a major support level that has been very valid in the past. Because even if you just draw a very, this way, basic trend line connecting the tops, there is still a nice move there to be 1900s. Probably 1907, 1900 is a bit of a resistance area there. We'll quickly do Fibonacci on this last move. Yeah, so this is pretty much 1908, 1920 on the top is my target area for gold for this move. So looking good, and I think long term there's a lot of upside potential. But gold is a slow mover, it doesn't pump like other assets, but it's pretty stable and crawling step by step higher, but it goes 2 steps up, 1 step back always. So gold looking good, in line with last week's TA. Bitcoin, we'll take a look at that in other charts. Bitcoin dominance pretty high up, forming a bit of an ascending triangle, and I think this will have a bit of a pullback if Bitcoin goes up. So we might get a bit of outperformance on the altcoins, probably to that 43-ish area here. That is the next support level for BTC dominance. Trend profit also indicating this reversal that's trying to develop, so there's a high probability that we get some move down. Let's see if the fibs align with the yeah, that 43 level, 43% level looks like the next target. So that could mean some nice altcoin gains in the coming 1-2 days if this Bitcoin rally picks up a bit of steam and the stock markets also. Ethereum to Bitcoin stabilizing but not looking that great. Made a slightly lower high and then took a plunge down, but so far also didn't break the low here from March. A bit of sideways action, but in the long term Bitcoin, at the moment Bitcoin is still the king. Bitfinex whale positions, longs stabilizing, shorts being closed, not more open, so that's good. And market cap is still holding on to their life around that 1.2 trillion, as we identified here in the end of April that would be the next target. Well, we made it there. Switching to the stock markets there. Higher time frames still looking pretty nasty. It's just been parabolically going down, and after this many down days, many down weeks, we could expect a bit of a rally, but it's having a hard time. The future started off well, but it is having a hard time, and we cannot say we're bullish until we break this level here. Then we can start to speak about the trend reversal. So far, strong downtrend since pretty much January, where we had a slightly, very slight bounce up, making the last higher high, and then we just started to go down into the abyss here. Realistically, if we look at weekly levels, this is the Dow Jones, there's still a lot of downside potential. It could easily go, let's do a quick guesstimate, it could easily still go 20%, 30%, 40% down, 35% down. Don't expect it to drop below COVID crash levels, but 20k is a magic number, and it would not surprise me if we will get there in the coming month. So I'm not optimistic, but as things go, after so many weeks, we should get a bit of a bounce before continuing down. That would make sense, because nothing goes up or down forever. There will always be small corrections, pullbacks in either direction. Same story pretty much. Let's go back to the daily. Same story for the S&P. We did make that lower low, have a bit of a bounce from these levels that have been support also here in March, just after this little dip here. So nothing too crazy. The interesting thing is if we add a volume profile, fixed ranged from the March low to current day, you will see that below this level where we currently are, there is not that much support. There's a small stop here, then all the way down here. So it's not looking like there's a lot of action, orders that could be waiting there. Nasdaq also in a pretty scary position. Also that lower low, looking to catch a bit of a relief rally here. And also there's plenty of downside. potential, but in percentages a bit less than others because we already dropped more. So long-term view, stock markets not looking good. Yeah, we might get a relief rally to like maybe even quickly looking 10 to 14% up. It is definitely possible, but still you need to go up 26% to make a new high and break the downtrend. So a lot of work to be done before you get even close. Just quickly looking at the VIX, the volatility index of the S&P 500, and it seems like volatility is picking up. It's a bit going sideways now, but I do think that there's more upside on the VIX, and if you look at the VIX, 35 and 40 are very significant levels. If you go above 40, it will be complete madhouse. We saw that in 18, we saw that in the COVID crash, we saw that in 2015. We also saw that in 2011. So every time there was a big market correction, you see the volatility increase, and pretty much above 35, 40, then a lot of short bots will engage and short the market like crazy. Now, interesting to take a look how this will develop when we will break this one. We're obviously going into the summer period, so it does make sense that this calms down a bit in July, August, but then we could get another big spike on that one. Switching to Bitcoin, there's some interesting things on my cycle analysis charts happening. We are getting a bottom star here, and that doesn't mean that this is the bottom, but it means a bottom is in development. Like we saw here in June last year, we had one star, still 16% downside before jumping back up, and 16% from the current levels would bring us to 25k. Look in history, we had it on the COVID crash, then on the sideways area in May, June 2020, where the market was recovering. We also got these bottom stars, but this was not in a bear market. If we go to a bear market here, like the 2018, 2019 bear market, you will see you get a star, some sideways action, another star, but then you still had a very violent 50% drop, I think, about 50%, and then all of a sudden you got a whole cluster of stars for weeks and weeks and weeks and weeks and months. This on the weekly chart. So keep in mind, one star does not make the moon. You need more clusters in a bear market to confirm. Same goes pretty much though for the other side. You see here at the top we had 2 stars before the correction. This one didn't even make it to a top sign, and in previous cycle we also had a cluster of stars here before we actually turned around. So it's not we will go up now signal, but it is something that indicates that there might be 1 or 2 bigger moves on the horizon before we will start sliding up. Takes a long time to play out. You're talking about weeks and months here, but it's definitely interesting to see this first sign on this weekly chart. Okay, look at logarithmic. We see that we did break to the absolute bottom of the green zone extension here, that red zone, and we only dropped there out of there below that once in the COVID crash, which was a market anomaly. Obviously, further back in history we never really even gotten to those levels. And I think that's really interesting because this is also, you know, the last market recession in the macroeconomics was in 2008. That was the reason why Bitcoin was created in the first place. And since 2008, 2009, the macroeconomics has been in a bull market pretty much. So this is the first time ever that we do see Bitcoin in macroeconomical bear market, almost recession. I think it's pretty much, we can call it a recession, but officially we still need a few percentages down for that. So it will be interesting to see how this model acts in a recession infused bear market. So far we managed to find ourselves pretty much at the bottom of this model. I think the coming weeks will break a lot of models. I think stock to flow extended is already broken. The original stock to flow is still within range, but everything is based on history, and all history of Bitcoin that we have is in macroeconomical bull markets and not in a recession. So don't look too much at all those history indicators. We always reversed here in the history of Bitcoin. Yeah, that might be true, but we have never been in a macroeconomical recession yet. So this model of mine also being broken, we could, if we don't reclaim the 34k very soon, I can pretty much toss this one. Also a victim of the first recession that in Bitcoin's lifetime. Here also, this was the projection that I made last week, how it could play out, completely falling through the floor of this model. We do see finally some oversold signs here. So we could be around here. That's why I made this candle copy paste. You see, we had those two little oversold dips. We had a bit of a recovery rally before finalizing a bottom with a more solid oversold empty dump. So that could bring us to low 20k pretty much, and ending the year around 38, 40k ish. Would not surprise me at all if this scenario plays out. There are more analysis that point towards the same direction, and well, this is not really analysis, this is just a fractal of candles based on this indicator here. Hash ribbon's still okay, but it is topping out a bit, but no capitulation on that level yet. I think if we do get to these levels here, we might see that drop in the hash ribbon before recovery, and I will definitely cover that if it happens in the coming weeks to month, because those buy signals that are created by this hash ribbon are one of the most effective solid signals you can find in this market. Switching to my pretty famous laser show, we're stuck in a range pretty much since May 12, so we have been stuck here for quite a long time already, and on lower time frames you can have some nice little trades, but we are not out of this zone yet. You really want to, exactly like I said, the 16th, you want to, last week's MMA, you want to break out, confirm it, bounce in either direction. Obviously you can play the up and down moves within this zone until you break out. For the rest, I did update it before the zoom, but with TradingView crashing it didn't save it. There is some nice GAN support at the current levels. It's just following the lines pretty much within this. One GAN here, one GAN there, one GAN there. So Next level of support, again wise, there is some tough area to break here in the high 20s, but after that, after like 27, 26, we go, the support is exactly at this low, that 25k dip that was bought up pretty fast there on May 12th. So, and this support line goes back down to 22, 20k. So not really an area of high confluences, we're stuck in a range, we have to break out of that. Looking at some D-Mark and Elliott wave. D-Mark, we had a nice buying signal that worked out pretty well. If we looking at wave analysis, Elliott based, pretty much the same picture as last week, but slightly updated. If we look at the wave count, this is an example of a bullish wave. Obviously we're in a bearish wave now with 5. The peak is here. We are looking to get the correction wave A that would bring us around 39, 40k, which is by coincidence, of course, exactly the bottom of this ascending channel that we were in January until beginning of May, and that we broke out of. So that would be our A, hitting around 40k, high 30s, 40k. Then your B correction wave would bring us back to 30k, 31k ish, still making a solid higher low. And then the C measured move is pretty much again the bottom of this channel, and after that it's pretty hard to see where we will go from there. I think this is a pretty good prediction on the daily. On the weekly we do have another story. Let me just toss the drawings here. We did have some wave shifting going on, but we are in 1-2. So if we would briefly draw that in, no, not that one. Elliott wave 1, 2, 3, 4, 5. So we have our one. Sorry, taking the right starting point. We have our 1, 2, 3, 4, and then our dip to the 5. That could bring us pretty far down. 1, 2, 3, 4, and I'm drawing it completely incorrect, but anyway, we have that wave shift, so we just have to see how that will develop. I don't think it will play out that far, but downside targets are still the low 20s. Just switching to the daily because I think that's the more predominant one, where there's a very nice confluence with these historical levels, so this is definitely tradable. You see that this wave 5 that we got here had also some very strong signals on D-Mark sequential countdowns, and on the range expansion indicator I'm just testing 3 variances of that at the moment. So I think we will get that correction wave like we expecting on stock markets, but we will definitely not take out our last highs, and I don't think this will be any trend reversal, but more relief rally, correction, relief rally before potentially more downside if the current market conditions, macroeconomically speaking, are not changing drastically. So high time frame, this is my plan to look for. Waves can break, keep in mind if things turn around to the worst sides in the stock market, we could just break this wave and go straight down. But this is the most likely scenario in my opinion, based on several things aligning in the charts. Going to my other indicators, and today let's switch time frames a bit. If we look at the daily, trend strength is bottoming out. We did have a reversal sign, but so far it just played out sideways. My experimental strength index did flip green here, so it's looking, it is even above its deviation band, so that is a clear sign that we are getting a nice pump. Last time we had that was around here. Like here we also break the deviation and we had a nice move up here of about, from the deviation point, 15%. Here we also broke the deviation, but we failed out a bit. Still was a pretty solid candle there. So on the daily, it also looks like we might get that move up to towards the high 30s, 40k. On market hyper, unbalanced divergence on the daily, very nice fat anchor wave formed here, and money flow is trying to increase towards zero. True money flow hasn't started yet, so it is a sign that we do need more money flowing into the market. Switching to the 4-hour, we had this ascending channel and that we broke up and we backtested now. Now it is accumulating. Price action is aligned with the breakout. We are getting on count 7 setup, so we might have a bit of a sideways area around that 3500, 31k area here. Blue dot on market hyper, be aware for a move up or down. It did play out to the upside. Nice anchor wave, trigger waves, and then the move up. The 4-hour money flow is pretty flat, but it's looking to gain some momentum. Nice bottom exclamation marks here, showing that trend is developing. To the 1-hour, trend strength dropping a bit, obviously because we're not making significantly higher highs. I'm just floating a bit sideways. Some divergence developing here on market hyper by the looks of it. Yeah, definitely more bearish divergence. That would be the second one in a row. Could just mean a bit of sideways action, or that it already played out a bit in these candles. That is my hunch. Money flow pulling back slightly, but still far from its moving average. On the 1 hour, it gives me more a sideways feeling there. And then to what has lately has been my favorite time frame to trade. It just worked out in the current market condition. The 15 minutes worked really well. Some sell flags here, TD sequential, reversal signs, and on here also on the setup, momentum shift after the setup count, also aligning with the countdown count, so really nice confluence here on the 15-minute. Had a bit of a pullback, percentage R is recovering, trend strength is still in oversold, but a bit of sideways action will probably reset that, especially if we confirm this higher low here. This pretty much also already played out. the bearish divergence definitely played out. So the 1 hour gives a bit of sideways feeling, 15 minutes might have a bit more downside potential before bouncing back up there. This was definitely a nice entry. Alright, I'm gonna try load another chart. Hopefully it will load while streaming. In the meantime, while it's loading, I'll quickly check my chat to see if any questions. Not yet. Oh, this takes probably too long to load. Maybe we got lucky in the last 2 minutes. So, there we go. I will be releasing this to my VIP members tomorrow. The trend master indicator. But in this case, you see the multi-time frame view from 5 minutes 15, 24, 30, etc. So if you just want another time frame, like this should be the 60 really, and this the 30, then you have a very quick overview of the different time frames. Like weekly and 3-day, we're still in a downtrend. Then here the 4 hour, that should be the daily. I have been experimenting too much. Daily, there we go. On the daily, we see some mixed numbers. The total score is already neutral. There's not, some are saying uptrend, some are downtrend, and SL channel is neutral. Status still looks a bit trending, but it's not detected where. If we go to the 4 hour, we are in an uptrend still. The 1 hour uptrend, 30 minute is still an uptrend but close to flipping neutral. 15 minutes is neutral already and sideways. So the 30 minute is sideways and the 5 minute is in an uptrend. So this gives you a very nice overview. Release tomorrow, and the intention of this is to stop and start our bots, our scalping bots. So we only will trade shorts when this indicator says everything is aligned for a downtrend and it's not going sideways. So that's the last part for today. Thanks for watching. We'll be back with another MMA next Monday as always. And tomorrow there will be a live stream going over this Trendmaster indicator, how it works, how to set it and how to use it. So hopefully I'll see you all tomorrow and in the Discord in the coming hours and days. Stay safe out there, safe trading, and don't forget to respect your stop losses.